Okay, guys, welcome back. We'll get into some stock charts. I got there's a few things moving around, so I want to point those out while there's still opportunity. A lot of the time I try to put out these videos during the day because that's when the opportunity exists. And so when it starts to show itself, that opportunity will close pretty quickly once people realize it's there. So if I wait till the end of the day, I just feel like sometimes, if there's opportunity during the day and I tell you about it after the end of the day, a lot of the good entries and the low risk trades have been capitalized on. And so I want to get this out right now. All right. I had PayPal up, but I was just kind of watching that. Adobe, here's something I think that's interesting. All right. So look at the daily here. Yesterday, we went above my stop that I had called out at around 457.50 is where I was looking to stop out on, but I decided to not stop because the volume in the SPY was so low. The last 3 days is the lowest volume we've seen since the market crashed back in late February. And because I saw the market just creeping higher on really low volume, it just was a non-confirming move higher. So to me, it looked like Adobe was a stop raid. It was a stop raid move. Popping it above, and today we're rolling back down. So far that's proven to be true. If the day closes back below this 456.50, then I would expect that this will continue to move lower. If it recovers and starts to move back above this 456.50 and closes back above here, then we'll go ahead and stop out. Netflix, kind of interesting. You can see on the daily chart, this is going back to the March lows, and we've just been walking up this trend line here. And we broke the trend back here on July 23rd. If I go to the hourly, you can see we've just been consolidating and underneath support, which is now resistance, and starting to get rejected. Right here, they made an attempt to get back up there, and it started to fail, and now it's starting to roll over. So we'll see. What I'd like to see is some sort of impulsive selling, not just this, not this light selling down, light selling up, and just this grind. You want to see impulsive selling. That's your trigger. It is below support though, and it is being rejected by resistance. So could be a potential downside move on this one. I'm not 100% interested in it, but I think there is probably some opportunity there. DraftKings seems to really be in a downtrend now, and you can see here on the daily chart, or we'll just keep it to the hourly. I don't want to adjust that chart. Nice uptrend, broke the uptrend. This is where I started to point out the trade and saying, okay, this is a good short, or could be a good short. It did a back test and then it rolled over. So that trade, from the breakdown, we'll just go from the sell signal, ended up being a 26% move to the downside. And it now seems to be in a downtrend because you can see we ran up and we've formed this downtrend line now today. And so, or in the past, and today we ran up, tagged it, and rejected. You can see the selling that came right after we hit resistance. So it is in a downward channel, and until that changes, expect this to continue to move lower. KHC continues to work up today, almost 0.2%. And the market's down, so it's showing relative strength. You can see here on the daily, we have the trade idea is really gap entry at 35. It's about 36, and gap fill. The first profit target would be right here around 41.95. Again, I like to sell a little bit early before you hit that. You want to step in a little early. You don't want to be late. And then the final gap fill would be at 47.93. So if that's really the trade idea. I like it. It's you can see we bounced off really strong support here at 33.50. So any pullbacks to 33.50 could be an area to add. That's major support, and we look for this thing to continue to move higher. So it's total, it'd be about a 36% profit appreciation. And then this thing's also paying about a 4% dividend, 4 or 5%. So that's the trade idea for now on this one. Okay, so someone asked me to look at Shop. Let's go ahead and look at it. Here's the weekly. And we've just been walking up an uptrend on the weekly. If you look at the daily, or well, look at the RSI and on the weekly, yeah, it's overbought, but it's not as overbought as this thing can get. The kind of the max range of that this thing gets to on the weekly is about 83, 84, and we're sitting right now at 72. So could continue higher, obviously. In an uptrend on the weekly, in an uptrend on the daily. I don't see any sell signal. I don't see any reversal candles or anything on the daily. And that's where I like to find my reversal candles, is on the daily. I don't see anything. Yeah, I mean, here's an outside day right here that you had, and you did get confirmation, but we're just doing a kickback rally, and we're above an uptrend. So what I would look for, I would just say that this thing's going to continue in an uptrend until it breaks the trend line support that I've got marked out here on the daily. So, depending on when that actually hits and then breaks, that would be your sell signal. Until then, it just looks nothing. It looks bullish. Volume is falling off. You can see the volume has been getting pretty low. So that's something to watch. Still in an uptrend though. And clear negative divergence, obviously. So you can see it right here. Big negative divergence on the PPO, but we don't have it there on the RSI really. It's not there on the RSI. So it's kind of a mixed bag on this one. And so I would just go with the trend until it breaks. That's what I see on this one. Okay, that's it for the charts. Now I want to dive into just one thing I'm seeing. And so a lot of people say, don't fight the Fed. The Fed is buying this market. That's why this market's going up. That's, for the most part, that's the bull's argument, is the fact that prices are going higher, so prices will continue to go higher. That's called recency bias, but ultimately that's what it's called. And then also that the Fed's pumping money, and you don't want to fight the Fed. It's not usually earnings based. It's not, a lot of other things. So let's look into that. So here's the Federal Reserve balance sheet over the last 3 months. And you can see, obviously, it topped out right around June 10th and has been selling off, and, a little pop right here, but ultimately has been selling off to flat in the last little bit. So now let's look at the bonds. So yeah, we can see that the Fed actually was selling, some assets, reducing their balance sheet slightly starting on June 10th. And this big drop ended at around July 8th. Now, if you look at bonds, you can see here is June 10th right there. And I'll just mark it out. June 10th is right there. And July 8th is really where they bottomed out with, the reduction of their balance sheet right there. And so the Fed has been reducing its balance sheet, selling bonds, and the bond market has continued to move higher. So it's not the Fed in this spot here, and it's not the Fed buying the bonds. It's the market. And so what that tells me is you've got market participants buying bonds. When you have a stock market rallying, they're still buying bonds. Why are they buying bonds? Bonds are a safe haven trade. Bonds are not something that you buy if you're bullish. Bonds are something that you buy when you're defensive. And you can see here, this goes all the way to August 5th. The Fed balance sheet has pretty much been flat, and the bond market has continued to move higher. So it's this move here is not due to the Fed. It's because the market participants are buying bonds. All it takes is a little bit of homework to look into this stuff, and it's really easy for people to just, say, oh, don't fight the Fed, the Fed's buying. But the reality is that the market is giving you a signal here. The market is buying bonds, looking for protection and looking for safety. And why are they doing that? If the market's in a bull market, why are they buying bonds? That's what I want to say. Okay, guys, I'm going to wrap it up there. Thank you. Catch you guys on the next one.